Here to give us her latest portfolio and strategy advice is Lucy MacDonald, Chief Investment Officer at Allianz RCM. Thank you very much for coming in to speak to us. So what do you think we can expect from the markets when they open this morning? What is the reaction to the Basel deal likely to be?
I think on balance, more certainty is always never a good thing within equity markets. And so we now have a better idea about how much capital is going to be raised for these companies. We've seen it already today with Deutsche Bank. And we will see more. And that is what analysts need and what investors need, is to know how much capital is required for each particular institution.
So you're saying it's a good thing because it removes that element of uncertainty that has been hanging over the markets for so long now?
One particular element of that, for the banks themselves, yes.
And what about the other elements?
Well, we still have more to come as far as understanding the potential leverage going forward. But this is the major plank of it, because this is what investors, when they're looking at any institution, they want to know how many shares are in issue, and so we will have a better idea when they've gone through this process.
And does the time frame banks could be given as much as 8 years to really phase these new rules in? Is that enough time for them to raise the capital that they need, if they need to raise that capital?
Yes, I think it certainly is, and they've been relatively generous with that. But most institutions would rather get it done sooner than later, and that will depend on the environment that they are faced with, the market environment.
We saw European banks last week raise something like $20.5 billion in the markets. I think that's the fastest rate of borrowing in almost 6 months. Is that investor appetite likely to last?
We will see, and I couldn't possibly say. But I think, as I say, the fact that you've got more certainty about what the eventual amounts that to be raised are, then that will be favourable for the raising of them.
And tell me a little bit about your investment strategy right now in the current economic environment.
Well, we are still very much focused on looking to find certainty of growth and quality of growth, because the overall environment is seeing some slowdown since the beginning of this year, economic growth and corporate profits. So that's something that we are very much focusing on. But within the markets, there's a lot of value there. And certainly looking at equities against fixed interest, you haven't seen this much value in the markets since the early part of 2009. So we're finding it quite a favourable environment, as long as you can deal with the volatility that's there at the moment.
And are you investing in banks?
We are, yes, but quite carefully and selectively. But I think this will give us a broader universe into which we think that we can really sensibly invest.
And right now, which do you think are more favourable in terms of UK, US, European banks?
A mixture, I think. I mean, some of the large US banks still need some capital raising to do, Citigroup and Bank of America. Below that, there are others with better capitalisations. And again, within Europe, there are the Swiss are relatively well capitalised, but the Germans haven't been, but will be.
I mean, despite the time the banks have been given to adjust to these new rules, how concerned should we be about the prospect of owning shares in a bank that can't pay dividends?
Well, obviously, more difficult to value higher risk, but I think most investors have been aware of the risk around dividends in the banking system for the last 2 years. So that should be really in the market, and they've been looking for dividends elsewhere.
Well, Lucy MacDonald, Chief Investment Officer of Allianz, thank you so much for your time.